Right. Good evening, everyone, and welcome to this wonderful webinar on where we discuss the NBFCs and the framework. On behalf of the Professional Development Committee of the ICI, I would like to welcome the Chairman, PD Committee, Mangesh Kinnareji, and Purushottam Khandelwalji, the Vice Chairman of the PD Committee. It's a very interesting discussion today, and about the NBFC sector, which plays a very, very vital role, in extending credit to the undeserved segment and supporting India's financial system. And today, we've got two tall personalities with us. One, let's welcome Shri Rahulji Kamble, General Manager, Department of Supervision at the RBI, and also another very tall figure.
Yeah, I think some issues there. Sandeep Welling is here with us, who is a partner and who is also authority in
Chairman of
financial sector. Yeah.
PD Committee, to please address all of us. Mangesh,
Yeah. Thank you, Arpit. I think you also check your internet listing. You in between little bit not audible. But yes,
Okay.
friends, welcome you all for this important webinar on overview of comprehensive overview rather of NBFC sector and NBFC other aspects regarding NBFC regulatory, then operational as well as professional opportunities in this regard. As you all know, the Professional Development Committee has been striving for exploring new professional opportunities, or I can also say that professional opportunities which are there, trying to explore it in a different manner, because some aspects of it we may not be knowing it at all. NBFC, even audit and other aspects we may be knowing, but certain NBFC compliances and NBFC consultancy itself is a professional opportunity which perhaps many of us have not dwelt upon. So today we are having both the sides from regulatory aspect, which Sri Rahul Kambleji, who is a GM from the RBI, will be dwelling it, and CA Sandeep Welling from the chartered accountant side, who has been a partner in Kirtan and Pandit, and he is also a complete regularly auditing and consulting also NBFC sector. So he also will be throwing light on the professional opportunities. As Arpit has rightly said, NBFCs in India are growing, and in the areas where banks are not perhaps able to reach out, NBFCs are reaching out because of the structure of the NBFCs which is being there. Different kinds of products have been introduced by NBFCs, not only in lending, but also in terms of the assistance to the different types of assistance to the businesses. While doing so, there are a lot of, I'm not saying ignorances, but there are a lot of lack of understanding as regard what are the compliances and how it should be done. And Reserve Bank of India has been regularly guiding the NBFCs. But as I said, the reach of NBFC is so vast, and in fact, at times companies don't know also that they have turned up to the NBFCs, and there the role of chartered accountants is very, very important. And therefore, let us understand the complete comprehensive regulatory aspects, how the NBFCs are regulated, what are the regulatory aspects which chartered accountants also keep in mind while consulting, while auditing, and while other way dealing with NBFCs. And at the same time, what are the operational aspects where we can just, if we specialize it, we'll be definitely able to explore the professional opportunities, and we'll be developing our profession also as far as all the aspects of NBFCs are concerned. And therefore, this is a complete, very relevant program as such. It is an outreach from RBI as regards the regulatory aspects also, and from our side as a professionals also, how we can take care of it so that we will be able to completely guide the NBFCs, because some NBFCs are of such a small size, perhaps at times it's very difficult for them to hire complete accountants or legal experts in this regard. So in this place, chartered accountants in practice can play a very important role, provided we have a complete overview or a complete comprehensive knowledge of its regulatory aspects. So with this, I welcome you all, and I'm very sure that this session will be completely engaging session, enriching session, and we'll be able to do much more things in NBFC areas after this session. So thank you, Rahulji. Thank you, Sandeepji, for being here. My council, on behalf of my council colleagues, Professional Development Committee and ICI, I welcome you, both of you, as well as all the entire audience which is here in this webinar, in the series of PDC's series, Professional Development Committee's series of Discovering New Avenues, that is DNA. Thank you very much, and I welcome you all once again. Over to you. I think Vice Chairman, sir, Purushottamji, you
Thank
can
you.
address this.
Yes, Mangesh bhai, thank you very much. I think very important point that you highlighted. Outreach program, and when you have a regulator coming and talking to you about NBFCs, I think it becomes very enriching. Thank you very much, Mangesh ji, for this DNA. Now inviting when we talk about DNA, D stands for dynamic, A is for action oriented. We have one such vice chairman of this committee, the Purushottam Khandelwal ji from Ahmedabad. I request him to please address all of us. Over to you, Purushottam bhai.
Good evening, respected chairman of the PD committee, Mangesh Bhai Kinare, uh, my council colleague and dear friend, young and dynamic regional council member at that time was a chairman of the WRC and now entered into central council, is doing a wonderful job in the council, Arpit Bhai Kabra, General Manager Rahul Kamle of Reserve Bank of India and Sandeep Bhai. Welcome both of faculty to seminar. Sir, our PD committee is dedicated to find out a new avenues for the chartered accountant, and our chairman Mangesh Bhai Kinre is already discovered a DNA. So always they are finding a new avenue for the chartered accountant. The Reserve Bank has a more control over the NBFC company. So the most of the practicing chartered accountants is not enter into affairs of the NBFC because they are afraid from the Reserve Bank of India. They get so many notices from the Reserve Bank of India, and where the one line is always there, you surrender the certificate of NBFC. So nobody touch this area. So I request Sandeep Bhai to boost up the confidence of our professional brother that they can help because few days I was with the Finance Minister of India at the Shillong. And they always say the professional are the person they motivated to the businessmen, and the NBFC is a company which provide a finance rather than some relaxation terms as compared to the banking sectors. So this is the boost up to the economy. So this role of important is very important. As a Reserve Bank, you are a regulator, and Sandeep Bhai is giving confidence to the chartered accountant. I will not much of time because we all are here to learned faculty of the this session. Thank you so much.
Thank you, Purushottam bhai. And you highlighted a very important thing. And for all the audience who are here, who's part of this DNA series, let me first congratulate all of you. Um, ICI has entered into a very strategic MOU. Purushottam bhai has been the member of the Board of Studies, and I, on behalf of the Startup MSM Committee, we were entered into, and where Nirmala Ji Sitaraman, the Honorable Finance Minister, was also present in Shillong in the Northeast. We want to develop Northeast Corridor, and chartered accountants along with IICA, I have entered into an MOU to try and help the youngsters, the students and the other articles community, the interns community, to develop modules on tax, corporate governance, maybe NBFC framework, because it's there everywhere. Lending is one universal phenomena. So I think I must congratulate Purushottam Bhai, who recently was also part there, along with the president, ICI Charanjot Ji Nanda. Having said this, now we all understand the relevance of the NBFC sector. With growing scale and digital adoption, we've seen an increased regulatory oversight under RBI's scale-based regulatory framework. Now, this classifies them into four risk-based layers. Now, these reforms aim to enhance transparency, governance, and risk control. Now, that internal controls and risk frameworks are the most essential for the growth of an NBFC. On the other hand, auditing of NBFCs is increasingly important due to the growth and regulatory changes. Auditors now play a crucial role in ensuring financial integrity by evaluating areas like asset classification, risk management, and compliance under this same framework. Now, the opportunities come with responsibility, as Purushottam mentioned, and as Mangesh ji mentioned, to maintain ethical standards, independence, and diligence. NBFC audits both a professional avenue and a contribution to financial system stability. Now, to know more about this sector, let us welcome today Shri Rahulji Kamble, General Manager, Reserve Bank of India, our first faculty. He'll be addressing on overview of NBFC sector, current regulatory updates and challenges, and the one line that Purushottam Bhai highlighted: please surrender your NBFC license. So Rahulji would like to we'd like to hear more on this kind of a concept and what can people do in order to comply with all of this. To quickly introduce him, Mr. Kamble has 25 years of extensive experience in various functions of the bank. Through his tenure, he's been actively involved in the supervision of banks and NBFCs, along with responsibilities in currency management and other regulatory domains. Now that brings in a very, very strategic importance also when it comes from currency management and other regulatory. We welcome you, sir. I request you to please address all of us on this topic.
Yeah, thank you very much, PG. And let me first thank ICI and PD committee for inviting us. And it's a great pleasure talking to you on the very important subject of NBFC regulations and taking a clue from what the earlier speakers have said that regarding cancellation of COR. So let me convince you or tell you that Reserve Bank of India is not there for only cancellation of the licenses which have been issued, but actually we are there to support and protect the sector, provided they actually fall into the regulatory compliance ambit. So without taking much time, I'll use this PowerPoint presentation which is with me.
I request the backend team to please load up the presentation.
Yeah, so just sharing the screen.
Yes,
Yeah,
all
it's
right.
already
We can
there,
see
I
it, sir.
Yeah,
Yes, sir,
yeah.
we can see
I
it.
think everyone can see this.
Yes, sir. Please put it in slideshow format. So,
So it's okay now?
no, sir. Just click there on the slideshow and then from beginning. So you can just start the slideshow so that we can see the entire screen.
Sir, there is a cup kind of a
And sir, from
sign
beginning,
at the
yes.
bottom.
No, you are right, sir.
There's a
इसको
cup.
from beginning पे कर दीजिए.
Bottom, at the bottom,
Slideshow format. Slideshow. Now is it okay?
No, sir. Sir, you'll have to just, if you can see, there is minus and plus below in the right bottom. And sir, there is one, so just go below on the right bottom. You can see 73% minus and plus is there. उसके sir left hand side पे आइए. There is a cup. Sir, click on that.
after the minus sign, on the
Near
left,
the
there is
minus,
a
yeah.
cup.
Yes, sir.
Yeah.
Yes.
Now it's okay. Yeah. So I'll begin with the outline of what I have to present here. So first is the legislative framework of NBFCs, which is very important. And it will be like what we were doing earlier. We were doing the NBFCs classification based on the importance, systemically importance, and acceptance of deposits. But now these guidelines have been revised, and from October 19, 2023, Reserve Bank of India has come up with a direction that is on scale-based regulation. We found that the earlier the categorization of NBFCs was not actually very much convenient for supervision purpose. So now it has been scale-based regulation of NBFCs, where we have divided the NBFCs into top layer, upper layer, middle layer, and base layer NBFCs. So the purpose of this very presentation is to give the outline about the base layer NBFCs. We will concentrate on that particular subject because although the number of base layer NBFCs is very high, the asset-wise, this asset size-wise NBFC as compared to around 60 lakh crores of the assets under management of entire NBFC sector, it is quite small. But the number of issues in base layer NBFCs is quite high. And we will also cover the overview of NBFC sector, then what is our approach for regulation, then supervisory expectations, then KYC related vulnerabilities. It is actually told to us by our department head that to please take up this topic with the statutory auditors, because they should be aware about this particular thing. This is the legislative framework of NBFCs. As I said earlier, in 2023 October, we have revised our guidelines of NBFC regulations, that is on the scale-based regulations, that is based on the asset size. This particular chapter 3B of RBI Act, it talks about the NBFC regulations, the important definitions, and what are the activities of the NBFCs, how it should be controlled. So this is the granting regulatory and supervisory powers to RBI, chapter 3B, and powers to issue directions to NBFCs how to conduct the audit, inspections, and take actions against those violating the provisions of the Act. So this gives immense power to Reserve Bank of India, who are violating the RBI directives. The important definitions have been quoted in section 45BB, like deposits, what is the deposit, then what are the financial institutions who can actually accept the deposits and who cannot accept the deposit, what is the definition of NBFCs, and the most important thing is the registration of NBFCs with Reserve Bank of India and net own funds. The NBFCs cannot carry out the NBFC, the non-banking finance business, unless and until it is registered with Reserve Bank of India. The certificate of registration is included. There is a module called application called Pravaha, which can be used for application of the certification of registration to Reserve Bank of India. And the section 45 IC, it deals with the creation of reserve fund by NBFCs, and whenever there is a profitability, some reserve fund has to be created out of the profit of the net profit, that is around 20%, which is it has been said. Then section 45 IT, the power of bank to remove directors from the office. If Reserve Bank of India is satisfied that in the public interest or to prevent the manner in which the NBFC is carrying out business, which is detrimental to the interest of the depositors or creditors or the financial stability, then Reserve Bank of India has a power to remove the directors from the NBFCs. Normally, the NBFCs will decide the policies of NBFCs, but if the board is not able to function as it should be in the interest of the depositors or creditors, then Reserve Bank of India can actually supersede the board and decide the policies. Then most important thing is the power to exempt, that is 45 NC. So Reserve Bank of India can actually exempt the NBFCs from the regulatory ambit of RBI Act by an official notification if it feels that it is not required to do so. And the last one is the power of conducting audits and inspection, that is 45 NC. Next slide. So these are the attributes of NBFC sector. So first attribute is heterogeneity. As we all know that non-banking financial institutions, they exhibit significant heterogeneity in India, encompassing wide range of institutions with diversities and in sizes also. So this really poses challenges for regulators for the mitigation of risk and its monitoring. The NBFCs, they play a crucial role in providing the last mile connectivity, as the second point says, because as Mangesh sir, he was saying that the NBFC's function starts where the bank stops. The function of the bank is not there. So there is a wide gap of credit availability, which is actually fulfilled by NBFC sector. So how they do that? They achieve through the leveraging the technologies, building strong networks, and offering the tailor-made products. The NBFCs are embracing technological innovations to enhance operability and improve customer experience, expand their reach in key areas of innovations. And how they are doing it? They are leveraging the technology, adopting digital onboarding, eKYC, then utilizing cloud-based solutions for scalability, data management, and they are employing the blockchain technology for secure and transparent transactions. Similarly, they are also using the data analysis, predictive technology, and as a result, they are transforming the business models of the NBFCs. the specialized activities which are carried out by NBFCs, which banks are not doing, that is infrastructure financing. Of course, bank is doing hire purchase, then microfinance, venture capital, then asset financing, asset management, credit provisioning, as well as the financial advisory activities also carried out by them. If you look at the last point, the NBFCs are growing at the rate almost double the rate of the banks. So NBFCs are growing at the rate of 20.8% as per 2024 data as compared to 9.9%. So why Reserve Bank of India wants to regulate the NBFCs? The core objective of NBFC regulations, or for that matter, any financial institutions, can be regulated, and there can be different approaches for regulation, and it depends on the specific sector depending upon the risk appetite taken by the financial institutions. For banking, we have prudential regulations approach, which includes the risk appetite of regulated entities. The basic idea of regulation is to ensure protecting the interest of the depositors and shareholders, and overall the ensuring financial stability. The NBFCs have deposit insurance. They don't have deposit insurance like banking sector. And failure of NBFCs, it can result into a cascading effect, and it can become a cumulative effect across the industries. So the depositors will lose the deposits if they are not protected. The framework of rules and supervision, which is designed to ensure financial stability and soundness of the institutions. The aim is to protect the depositors, investors, and overall financial system from excessive risk taking. The key aspect of prudential regulations of NBFCs is maintenance of net on fund, liquidity, management of risk management, and ensure the prudent governance practices. Yeah, how we classify NBFCs? Earlier, it was like deposit-taking NBFCs and non-deposit taking NBFCs, systemically important NBFCs and non-systemically important NBFCs. So, based on systemic significance, before SBR, that was the model. But after the scale-based regulation master direction has come into effect, the systemically important non-deposit taking NBFCs and non-systemically important non-deposit taking NBFCs, they have been based on the asset size criteria. So after SBR, the base layer, middle layer, and upper layer and top layer NBFCs have been divided. So these are based on the yeah. Yeah. Now it's okay?
So your screen is not moving.
Now it's okay?
No. Are you speaking on the legislative framework for regulation of NBFCs too?
No, actually, I have shifted to other side.
Right.
Now it's okay?
No. You will have to, stop the screen sharing, and then when you start the screen sharing now.
Just give me a second. Just give me a second.
Yeah, sure. Okay. Hi, sir. What you have to do is stop the share screening.
Just wait for a second, madam. We have
Sure.
Yes. We have to.
Once you stop this share screening now, then you have to click on share screen and then on screen 1. Only then it will be, visible. This is visible. The 8th slide is visible. Yes. Share screen and go to screen 1. Yes. Share screen. You will see the left-hand side option as share screen 1. Just click on that. Yeah. And also now I'll tell you, can you see that plus and minus option? Yes, down there. On the left-hand side, you can see a cup shape, right? No, just see a cup shape on the left side, exactly on the left side after minus sign. Yeah, just click on that.
Now it's okay, ma'am.
The screen sharing is not yet started. Okay.
Is it moving now?
Are you on the 8th slide? Did you move?
Yeah, it is on scale-based approach.
We may be able to see a pyramid now.
I am able to see the pyramid, yes.
Yes.
If you could just, do up and down on a slide so that I can just tell you if that is moving.
Madam, we will go to the next slide. Can you see some charts, pie charts?
No, I am still on the pyramid screen.
Can you just call that person?
IT, yes.
IT, he is there.
Okay.
शेयर नहीं हो रहा है.
It is they're stuck on one slide. They're stuck on one slide, the next slide. शेयर हो रहा है ना?
शेयर करना.
So you will have to share the screen of that screen 1 that has been shown, so that it shows all the screens. I can see the scale-based approach. If you could just slideshow something. Yes. Now I can. Yes. Perfect, fine.
No, I am on the scale-based approach, ma'am. Is everybody able to see
approach. It is visible, sir. Yes.
Okay. Sorry for the interruption. So as I said earlier, now it is scale-based approach, and there are actually 4 types of NBFCs. Base layer NBFC, where the asset size is up to 1,000 crore. Earlier it was 500 crores only, but after the new regulation, it has been changed to asset size of 1,000 crores. Now, there are about more than 8,000 NBFCs in this particular category. Then the middle layer NBFCs, where the asset size is more than 1,000 crore. There are about 1,080 NBFCs in this particular layer. Upper layer NBFCs, we have identified based on the risk profile 15 NBFCs, and the top layer NBFCs at present, it is empty. The particular top layer is empty, and this is at the discretion of the bank to perceive the increased significant risk in this particular category. We come to the next slide. So in terms of, as I said earlier, in terms of numbers, the base layer NBFCs are having highest percentage among the NBFC sector, and it is followed by the middle layer and then upper layer NBFCs. So if you can see the first pie chart, 93.5% in terms of number, the NBFCs are there in base layer, 6.2% in middle layer, and 0.3%, only 0.3% in upper layer. But if you look at the asset size, 65.3% NBFCs, it belongs to middle layer, and 29.2% belongs to upper layer, and only 5.5% NBFCs belong to the base layer NBFCs. Then category wise also, if you look at them, the investment and credit companies, they form the highest the number of NBFCs, then followed by NBFCs, that is infrastructure finance companies, then followed by MFIs, then after that other NBFC companies. This is important regulations and master directions which are applicable to NBFCs. The core idea of NBFC regulation, there are four components. One is minimum net own fund, the requirement of minimum net own fund. Then leverage ratio that is limited to 7 times of the capital. Then basic corporate governance, board structure, risk management, policies and internal audits. And then fourth one is the adherence to fair practices code. So these are the regulations and guidelines which are applicable to NBFCs. Very important thing is principal business criteria. If any activity is carried out by NBFC that is more than 50%, such as including these particular criteria of business of loans, advances, acquisition of shares, stock, bonds, debentures, securities which are issued by government, and the similar activities which pertain to the financial activity. If financial activities are more than 50%, then this particular entity can be called as NBFC and it will be considered as a principal business criteria. But at the same time, if you look at the right side, which excludes the agriculture activity, industrial activity, if any particular NBFCs is carrying out these activities and the assets which are generated by carrying out these activities are more than 50%, then this particular company or entity cannot be called as categorized as NBFC. So principal business criteria is 50% of the asset size should belong to the financial sector, and not only that, the 50% of the total income which are generated from the financial assets should be from the financial activities. So these are the regulatory guidelines on minimum net own fund requirement of NBFCs. So as of March 31, 2025, this has been stated in the scale-based regulation circular also, master directions. So we have given a glide path for NBFCs to achieve the net own funds. So by March 31, 2025, these are the type of NBFCs which should achieve the NOF of 10 crores. There is not much change for the NBFCs in P2P. Then account aggregators, then type 1 NBFCs. Type 1 NBFCs are those NBFCs which actually cannot accept the deposits. Then IDF NBFCs, IFCs, then SPDs and housing finance companies. There is no change for requirement of NOFs for these NBFCs. So the own fund and net own fund, these are basic definitions of own fund and net own funds. So as you are all aware, shareholders funds, that is equity plus reserve plus retained earnings. And net own fund is the paid up equity capital plus free resource. And if we draw down the accumulated losses, investment in shares of other NBFCs and subsidiaries, that is exceeding 10% of own funds. So this is the basic framework for NBFCs in base layer. The leverage ratio of NBFCs base layer, it should not be more than 7% of the total capital held by NBFCs. Tier 1 capital, this is primarily engaged in NBFCs lending against gold jewelry. It should normally comprising 50% of their financial assets. In other case, other than the gold jewelry, in other case, it should not be more than 15%. If the leverage ratio is more, then NBFC is obviously taking the excessive risk by resorting to more borrowings to finance their assets. So that's why we have put a cap on the leverage ratio. So these are the income recognition guidelines. There is an exception to the unrealized income, the loan with the moratorium on payment of interest becoming NPAs after moratorium period is over. So this has happened only in the case of COVID times. So in the form of cash flow, underlying assets, the income which have been earned or received. So this is the asset classification for NBFCs in the base layer sector. So the special mentioned accounts, these are the accounts which are actually exhibiting some stress in recovery. That is, they are showing the early signs of financial stress and potential problems in the loan accounts. So there are three types of SMA accounts, that is up to 30 days. Then SMA 1 account is more than 30 days and up to 60 days. SMA 2 account is more than 60 days to 20 days. Similarly, for non-performing assets, now the definition of non-performing asset has been changed from the earlier definition. So this year, for financial year 2025-26, it will be 90 days overdue by March 31, 2026. So what we have done is we want to align the NBFCs, the classification of NBFCs, NPAs in NBFCs in the line of the banking sector. So in banking sector also it is 90 days overdue, and in all NBFCs, the NPAs in base layer, middle layer, top layer, it will be 90 days overdue. Similarly, the bills purchased and discounted, they become NPA if the overdue is more than 90 days. If there is no default in repayment in principal and payment of interest and account is actually performing well, then it will be classified as a standard asset. Substandard asset will be classified as NPA for a period not exceeding 18 months. But in case of other type of NBFCs, like middle layer and NBFCs, this period is actually 12 months. So the assets where the terms of agreement is negotiated, rescheduled, and structured. So this can also be classified as a substandard asset. In case of doubtful asset, if it remains substandard asset for a period of exceeding 18 months, so this will be classified as doubtful assets. And the loss assets will be, it has been identified by internal external auditor or by Reserve Bank of India during their inspection as a loss asset, or there is a threat to recoverability due to erosion in value of the security. If there is a fraud also in the account, so it will be classified as a loss asset. So for NBFCs, borrower-wise asset classification is followed, and the borrower-wise account will be treated as NPA or SMA as a part of day-end process. So it has to be done on day-to-day basis. The accounts which have been classified as NPA, they may be upgraded as standard asset only if entire arrears, that is principal and interest, are paid by the borrowers. So as per the RBI guidelines, even the restructure account and RBI resolution framework, a restructure account can also be classified as a standard account. And these accounts, they have to be disclosed in the annual financial statements of the bank. And these NPAs and provisioning details will be disclosed in their financial details. Although the disclosure norms for the base layer NBFCs are not as stringent as middle layer and upper layer NBFCs. So this is the provisioning norms for the NPAs. For standard assets, the provisioning is 25% of the outstanding. Substandard asset is 10% of the outstanding. For standard assets, for middle layer and upper layer NBFCs, it is 0.4%. In case of doubtful asset, the period for which the asset is doubtful, for one year, it is 20% of for the secured portion. For 3 years, 1 to 3 years, it is 30%. For more than 3 years, it is 50%. And for unsecured portion, it should be 100%. For loss asset, the 100% provisioning of outstanding is required if it is not a written off account. We'll go to the liquidity risk management framework. So this framework is applicable for NBFCs with asset size of 100 crores and above in base layer. So the NBFCs has to set up the internal liquidity risk tolerance limits, which are tailored to their business model. It should ensure that they can meet the obligations under normal and stress scenarios. And the base layer NBFCs are not required to maintain the liquidity coverage ratio. When we are talking about the risk management framework, it should be proportionate to their size, asset size, complexity, as well as the risk profile. The NBFCs, they have to devise the ALM framework to manage the liquidity mismatches between the assets and liabilities. So everyone knows that these include cash flow mismatches across time bucket, that is 1 to 7, 8 to 14 days, etc. So there is no requirement of granular stress testing for base layer NBFCs. The focus will be on the prudence of how the liquidity risk is management by the board of directors. In credit investment concentration norms, the base layer NBFCs are permitted to engage in providing loans and advances, that is the personal loans, then vehicle loans, microfinance loans, acquiring shares, then stocks, bonds, debentures, securities issued by government, local authorities, and other marketable securities. So they can also engage in leasing, hire purchase, asset financing activities, and SME loans also they are allowed to give the loans. So these are the restrictions for NBFCs, like they shall not make investments in any scheme of alternate investment funds because they are of very risky nature and they have a downstream investment either directly or indirectly in the debtor companies. Exposure norms are also not applicable for base layer NBFCs which are accessing public funds in India. So the board has to frame credit and investment concentration limits for single borrower, party borrower, and single group borrowers and parties. So these are the regulatory restrictions for the base layer NBFCs. So NBFCs, they will not partner in partnership firms or LLPs. The NBFC shall not lend against their own shares and debentures. There is a ceiling on IPO funding also, only 1 crore per borrower for financing subscription to IPOs. So NBFC can fix more conservative limits on that with the approval of the board. So dividend payout ratio, declaration of dividend payout ratio of 50%. The minimum capital risk requirement in last 3 financial years. Net NPA ratio less than 6% for the last 3 financial years. And they should also be compliant with the Section 45 IC of RBI Act. There is a prohibition on accepting the public deposits. The minimum NOF requirement will be 10 crore for NBFCs, investment and credit companies. The NBFCs will achieve the minimum NOF through a gliding path as it was seen during the last slide. The CRAR requirement is at least 15% with minimum 10% in Tier 1 capital. So NBFCs cannot lend to the directors, senior officers, and entities where these individuals have significant interest. We'll come to the governance guidelines now. So at least one of the directors should have experience of working in the bank, NBFCs. Then this management committee has to be formed. The board approved policies on loans, directors, senior officers, and related to that I have covered during the last slide. Board approved credit policy. We have the regulatory requirement and dissent. And upcoming restrictions are frequent reporting that we have mandatorily asked the NBFCs to file this NBFC ALM for liquidity. Similarly, for stricter underwriting, enhanced scrutiny has been prescribed for credit appraisal. This is very important, the applications for loan and processing fair practices code. So these are the guidelines which have been issued on July 1, 2011 and fair practices course for NBFCs. These are guidelines which have been issued by the bank on March 26, 2012. The NBFCs are required to provide clear and comprehensive information about loan products, including the interest rates, fees, other charges in the language which should be understandable by the borrower. The loan application forms to include information on factors that affect the interest of the borrowers to make an informed decision by them, and place a system of giving acknowledgement receipt for all loans so that there should not be any difficulty for borrowers in case of the dispute arises. So, loan agreement should be preferably between the NBFC and borrower in vernacular language. It should be clearly outlined the terms and conditions of the loans, including the interest rates, repayment schedule, and applicable charges. The acceptance of terms and conditions should be kept on record, and a copy of loan agreement it should be shared with the borrower also, and copy should be kept at the record. The KFS statement on computation of APR and repayment schedule, it should include all these factors. The timeline on the return of original immovable property documents, that should be mentioned in the loan sanction letter. This is regarding the board approved policies determining the interest rate and processing charges. Interest rate model should take into account the cost of funds, margins, as well as the risk premium. It should not be like excessive interest should be charged to the borrowers to invite the regulatory intervention. The rate of interest should be disclosed to the borrower in application form itself, and there should not be capitalization of penal charges. This is the last one. The branches, the NBFC branches, they should, where they are transacting the business, with the name and contact details of the grievance redressal officer should be displayed, and the complaint is not redressed within the period of 1 month, the customer may appeal to the officer in charge of the regional office of DNBS of RBI. Their complete contact details should be displayed at the NBFC branch, under whose jurisdiction the regional office of NBFCs falls. These are very important guidelines. We have come up with these guidelines on May 8, 2025 on Digital Lending Directions 2025. So these are the parameters and attributes of these guidelines. So there should be automatic lending process for customer acquisition, credit assessment, loan approval, disbursement. This is basically done through an app which is supported by the NBFCs. And the regulated entities lending service providers arrangement, it is a contractual agreement which defines roles and rights of the obligations. A periodic review of the lending service provider should be made. There should be a monitoring mechanism for the loan portfolio originated with the LSPs. Then regulated entities to maintain own website with details on digital lending products with digital lending apps and lending service providers. The details on customer care and grievance redressal mechanism, it should also be provided at the branch. REs, regulated entities to provide digitally signed documents, that is key fact statements, sanction letters, terms and conditions, and private policies to the borrower on email as well as SMS. So these guidelines aim to enhance borrower protection, ensure transparency, promote responsible lending practices. So these guidelines are applicable to all regulated entities, NBFCs. The feature of these guidelines is the scope and applicability, transparency in loan aggregation, then mandatory reporting of DLS, borrower protection, disclosure, grievance redressal, data privacy, and default loss guarantee. These are customer protection requirement to borrowers to be informed on details of recovery agent through emails. The loan to be disbursed directly into the bank account of the beneficiaries. The loan repayments to be executed without any pass-through or pull account. The loan repayment should not be made through any intermediary account. And very important is the SEAMS portal of Reserve Bank of India, where NBFCs, they have to file some returns on centralized information management system. So now there are 10 returns, DNBS 1 to DNBS 10. 10 returns they have to file. They have to be filed by NBFCs to Reserve Bank of India on quarterly basis. So this is on the default loss guarantee guidelines. So default loss guarantee, as you all are aware, it is a risk sharing arrangement in the context of NBFCs, particularly digital lending, and it is a contractual agreement where the third party, typically a lending service provider and another entity, guarantees to compensate NBFCs a limited portion of the losses arising out of loan defaults. So there should be a board approved policy for default loss guarantee, nature and extent of DLG cover, review of DLG arrangement and fees payable. There are restrictions on DLG arrangement, that is, they should not revolve credit to digital lending channels and credit cards. The loans which are covered by credit guarantee schemes, and DLGs are to be accepted in the form of cash, FD with lien or bank guarantees. If DLG has to be invoked, it should be invoked within overdue period of 120 days of the loan. So this is regarding the credit information reporting to credit bureaus. So membership of all the credit information companies is required. Fortnight submission of data to CICs for all its borrowers, including the historical borrowers. The alert through SMS emails to customers while submitting information to CICs regarding the default days past due, DPU. The customers to be informed on reasons for rejection of their request for data correction, if any. They have to undertake root cause analysis of customer grievance on half-yearly basis. The RCA is to be reviewed by the board at least annually. And there will be compensation of 100 rupees 100 per day if CI does not resolve the complaint within 30 days of filing. So we'll now come to the importance of statutory auditors for NBFCs. So what statutory auditors are required for NBFCs? They have to ensure veracity of reporting of companies' financial positions, then enhancing investors and stakeholders' trust, ensure regulatory compliance among NBFCs, adequacy and internal controls and assurance functions, guidance. They have to provide guidance on risk management framework so that they can adopt the evolving scale and complexity of the business. Yeah. So these are the supervisory expectations from statutory auditors. Recently, we had conducted one program at Pune also for the statutory auditors of NBFCs. We have actually tried to stress upon these points that they should hold obligation. They have obligation to certify companies' NOF, principal business criteria, on continuous basis. So actually, we are getting these returns from NBFCs on monthly basis. Then returns and exceptional reporting, they have to report to Reserve Bank of India a certificate DNBS 10 on quarterly basis and exceptional report wherever it is applicable. There should be complete disclosure as per regulatory guidelines. The disclosures regarding the related parties and exposure to capital market, real estate, sectoral exposure, disclosure regarding complaints, and adherence to accounting standards. Correctness of transactions of the company. They have to ensure the asset classification as per the regulatory guidelines, just we had seen in the previous slides. And then verification of expected credit loss models, including assumptions and data used for calculating PD and LGD. Statutory auditors, they are required to have effective communication with the management and the board of directors. These are the common deficiencies which are observed in financial returns of NBFC. This is based on our experience, and I thought, let me share this also with you. The NBFCs which are registered as Type 1 but having public interface and accessing public funds. Actually, Type 1 NBFCs are not supposed to accept the public deposits, but still they are accepting the public deposits and they have public interface. Then non-transfer of specific percentage of funds, it should not be less than 20% of net profit, but still some NBFCs are transferring less than 20% of net profit to the reserve funds. So NBFCs they are declaring dividend payout above the regulatory limits. So regulatory limits are actually capital adequacy, then net non-performing assets. Even if it is more than 6%, still they are paying out the dividends, which is not, they are not supposed to do that. The data reported in DNBS 10, that is the leverage ratio, it is not as per the formula prescribed by the guidelines. So this is one of the common deficiencies. This is other slide. The comparison between ECL and IRAC provision is not as per the template format as required as per the RBI scale-based regulation guidelines. The net unrealized gain arising on fair valuation of financial instruments included in own funds, which is not in accordance with the guidelines. Then prepaid expenses and intangibles from NOFs. There is incorrect reporting of key ratios such as the current ratio and incorrect risk weight to unsecured loans while calculation of CRAR. Then vehicle financing gold loans, loan to value breach is not monitored. Then non-returning of excess amount realized from sale of collateral to the customers, and including, because if there is a sale of collaterals in the and there is some excess amount which has been recovered, then it should be returned to the customers, but they are not doing it. Incorrect reporting of key ratios such as current ratios. So these are the actually things which are for these statutory auditors. This is also one of the very important things which auditors are required to see in NBFC functioning. That is identification of beneficial owners in case of legal entities, because there might be one particular entity which is actually the beneficial owner. So this has to be identified by the statutory auditors. Many times it so happens that the staff of NBFCs, they don't have sufficient knowledge of AML, and that actually results in violation of KYC AML guidelines. So the NBFCs have to conduct special sessions for the staff so that these things can be avoided. Then the filing of suspicious transactions reports, STRs. Suspicious transaction report, actually there is no clear-cut definition. If there is a new account opened by the NBFCs, and especially the deposit-taking NBFCs, and there is a huge sum which has been transferred in that new account, so then it becomes a suspicious transaction. So that actually depends on the discretion of the regulated entities. Then there is a reporting requirement to FIU-IND also. So most of the NBFCs have been registered on this portal, and I think it is working okay. Now earlier there was some issue, and they should communicate clearly the principal officers and the designated directors to FIU-IND in case of any queries there. These principal officers and designated directors should be available for answering these queries. So this is what the NBFC regulatory framework is in short. I tried to cover only base layer NBFCs because I knew that the time is very short. The middle layer and the upper layer NBFCs we have skipped, but more or less these guidelines are same for upper layer and middle layer NBFCs, barring a few ones. In case of base layer NBFCs, there is a little relaxation of guidelines in case of the NPA and net on fund requirement. So that's all from my side. And any queries is there, we can take up those queries. So thank you very much. Thank you. Over to you, Priyana.
Thank you so much, sir. It was indeed a very informative session. And we'll take the question and answer round at the end of the webinar.
Okay.
Right. Right. Okay. So moving on to our second session, I would like to welcome CA Sandeep Welling, sir, a practicing chartered accountant and our faculty for the second session. He will address on the topic NBFC audit and opportunities with responsibility. A brief introduction about him. CA Sandeep Welling is a member of ICI. With nearly 3 decades of experience in the BFSI sector, he has worked extensively across financial regulations relating to RBI, IRDA, and SEBI, serving clients in banking, insurance, NBFC, mutual funds, stock exchanges, and investment funds. CA Sandeep has been appointed by regulator for various consultative roles and also served on the boards of several public and private entities. His deep domain expertise has led to his participation as a speaker at national and international professional forums, and he has represented his firm globally for clients and business engagements. We welcome you, sir. You can start with the session.
Thank you. Please give me the authority to share the screen. Yeah. So Rahul sir, really, your session was really good, and in fact, most of the aspects that were expected to be covered as chartered accountant have been covered from the regulatory side. So my job now, as given to me, was how to practically come down to ensure that these regulations are adhered to, and how do we actually strategize. So first of all, I thank the institute and the committee PDC for providing this opportunity, in a sense wherein even regulators have given us this opportunity to audit or actually do the necessary consulting to the areas of various areas of NBFC. And it's time for us to rise to the occasion to ensure that we actually fulfill the aspirations of the regulator and the profession both. So my entire speech is broadly divided into 3 aspects. Um, the first one is, as chartered accountants, there is an expectation of ICAI as well. Our accounting body also has an expectation from us as a chartered accountant when it comes to audit. So I will briefly touch upon that. The second portion, actually, Rahul sir covered very well, and that was broad understanding of NBFCs and entire layering, etc., which I will skip fast. And finally, we will come to the session where, the entire regulatory expectations which Rahul sir spoke about, how do you practically work towards it when it comes to your audit. So I will start my presentation. How do I share?
Screen.
I don't have the authority to share.
Just 1 second. It is not letting you share.
No, it doesn't give me the icon. Now it's giving.
Okay.
Yeah. Is it audible?
Yes, sir. Done.
Yeah. Yeah. So when we say audit, I'll first, like I said earlier, we have to start with expectations of ICAI, because ICAI has really laid down a very well process as far as the audit of any aspects are concerned, including NBFCs. So let me start with, I've deliberately started with this one thing which is very simple and known to all of us, that what is the definition of audit? An audit is an independent examination of financial information of an entity, irrespective of its size and form, when such examination is conducted with a view of expressing an opinion thereon. Now, the very reason why I said this is it's irrespective of its size and form. So certain procedures which are expected to be performed, many times it so happened that my observation as chartered accountants in various seminars, most of us are very sincere and meticulous when it comes to actually arriving and finally certifying the figures. But what we miss on is the evidencing part. And therefore, many times the regulators feel that the audit is not being conducted in the right perspective. Although we may have done, but we fail to evidence that. And therefore, it is necessary that we situate that how do we evidence, and how I would like to speak first on what ICAI has already provided us with the tools for us to move forward. To explain this, I generally have been giving this example. Imagine if we were to go to a hospital, say a medical profession, any patient comes to the hospital, irrespective of his urgency, there will be some kind of a entry form or admission form that will have to be filled in. So that the client introduction, the information about the client, etc., etc. Although doctor may understand the problem, he won't simply attack. He will ensure that the tests are conducted. The information about the problems that are being faced are noted down and they are documented for him to actually move forward. So once they are available, they are analyzed, and then you have to understand what could be the risk and what could be the process that would minimize the risk of audit. And believe me, this is extremely crucial. 100% of the time when the regulators have felt that the audit was not conducted right, my experience is it was not about the final arrival of the figure, but the process. And this entire process was missing, and therefore we always are being nudged by the regulators. After you do that, you will have many staff people, very different people, but you have to choose right people for that right job, because NBFC especially is concerned. I would say that 100% of the finance sector now is so become technologically advanced that unless you have someone who has some technology background, understanding of the technology, and audit through technology, it would be difficult for her to conclude the audit effectively. So after you have chosen your team, arrange them in the nice manner, and finally then you conduct your audit. So this process, unless you follow, regulators will always think that you have not done your job. And see, institute has fought for us and have ensured that the larger forum gets the exposure to this field, emerging field of NBFC. It's time for us to rise to the occasion and ensure that we fulfill the aspirations and the responsibilities posed on to us. So regulatory expectations are really, like Rahul sir had mentioned, RBI has a regular expectation, SEA has an expectation, and in case there are listed debts or securities, SEBI expectations. So auditors, regulators always feel that as an auditor, we should be part of the governance chain. There is no point in we empathizing something with the client which is not in adherence to the regulations. I always say, if you have to, if at all you make an error, if at all you err, we should err on the regulator side, and so that we are, we disclose things right manner, so that regulators also can take a right view on the matter. Not everything would be, from the bad intent perspective. Not everything, regulators will not come on heavily on anything and everything that we report on. Information, that transparency is always helpful to all of us, and therefore we should somehow see to it that we are part of the governance chain, the team members that I spoke about, and the audit process. I would like to specify here that institute has come up with a implementation guideline on the working papers, and institute has also come up with the guidance note of NBFC. If we are conducting any kind of assignment, especially audit, in my opinion, it is necessary that both these books should be available with us, and the team member should be well versed with these aspects for us to move forward. I've given you some glimpses only from the planning perspective, because the otherwise entire thing would be too vast. So, from the planning perspective, when we start, there are certain things which are absolutely mandatory, and unless you have these, it is impossible that you start your audit, and that is your independent confirmation. It should be written, available in your documents. Engagement letter, demobilization. Now, some of these aspects are actually provided. The utilities are being provided by the Institute of Chartered Accountant. We don't have to spend on any software. If you go on the website of the institute, and you will find these there, and you should be able to download those for the purpose of your, that will help you evidencing what have you done. So note on understanding of the client, KYC. So category of NBFC, economic scenario around that, last 5 year financial, any regulatory remarks received by the NBFC prior to you accepting the audit, exposure and exposure norms of the exposure of the NBFC, and exposure norms as given by the regulator, IT environment, systems used by the NBFC, and fraud reporting. So these are some of the aspects which are extremely crucial when it comes to we starting NBFC audit. Next, materiality. Now, all of us know that materiality and performance materiality, again, this is part of the utility given by the institute, and it shouldn't be much of a problem. The guidance and the utility is so clear that if you train any one of the person in your office to maneuver around this particular utility, it's an Excel sheet basically. You should be able to conclude on all these aspects very, very efficiently. And they are very good. These utilities are extremely good, I would say. The fraud risk, minutes of the kickoff meeting, and communicating the audit schedule to the company. These are some of the things that will save you in case there are any issues. You will be able to evidence how you have approached your particular audit, how what all things you have taken care of, and how you know we are diligent as far as the particular mm, audit is concerned. So audit strategy document. Now again, some of these aspects, I hope it is available. I would like to see. Now, so they basically, this is just a page from the utility provided by the institute. So we don't have to worry. We institute has given us these things, and we can easily see to it that we have covered each and every aspect required for the purpose of audit. So this is then risk of material misstatement. And finally, IT general controls. All of us are aware that NBFC, I, in a colloquial language, I keep telling, all of them are 50% IT companies. The entire infrastructure, IT infrastructure, and the business is built on the IT. Regulators, Reserve Bank of India also has been insisting on seamless reporting on various aspects through systems without manual interference. Now, all this cannot take place unless you have someone who is qualified, understand, and do these ITGC audits for your audit conclusion, which includes IT governance, policy procedures and committees, asset management, access management, asset. Here, when I say asset, it's IT assets, access management, change management and SDLCs, backup management, BCPs, and BRs, vendor management, physical and environment controls, password policy, and please mind well, all these aspects are part of the guidance given by the not only institute but Reserve Bank of India also. Reserve Bank of India also has from time to time issued the various guidelines with regard to IT and cyber security of the registered entities with them. And all this is part of RBI regulation also. And therefore, mere audit and mere figure work is not going to help us, or it is not going to satisfy the regulator. Now, having done this base part, we can move on to, this is something which Rahul sir already has taken up. So there are, based on activities, the classification. I would like to just little go deeper practically, so that we understand how we should be strategizing. So ICCs, for example, investment and credit companies, like he said that most of them are under ICC categories, because they are general purpose, engaging asset financing, loans, most of them fall under this category. Now, it so happens that sometimes during the course of our any company audit, uh, if a company doesn't have much of a business, it has only investments, and suddenly you realize that its income, majority of its income and majority of its assets are on the basis of, there are securities, investment securities, and the income is only the dividend income or something like that. So which is the investment income. If in any year, if it surpasses 50%, it is eligible to be registered as NBFC, because if that fulfills the criteria which Rahul sir spoke about, then it is necessary that we notify it to Reserve Bank of India on the basis of the financials. So it may so happen that many of out of whatever number, large number that falls into ICC, many of them could be in this category, but still, when we conduct the audit, we should be very careful. So it is not just about NBFC. When we are conducting any other audit, any company audit, when we come across such a situation, it is necessary that we know that if income is more than 50% income is through securities, or more than 50% of the assets are through securities, and it's either or, it is it should be notified to Reserve Bank of India. Now, one thing which I must like to mention here, that if it is a fixed deposit in a bank, sometimes it so happens that the company has issued shares, or company has just taken the loan from somebody, and not sorry, and has deployed that amount into, temporarily deployed into fixed deposits of a bank. If income comprises of bank deposit interest, this criteria uh, of securities, it does not fulfill. So when we take, say, securities, it means the investment securities and not the bank deposit. So we should keep this in mind. Then infrastructure finance companies. So these are the two categories, like he said, that comprise of the large ICC comprises a large number IIFC in terms of asset size. Then MFIs, HFCs, CICs. So if you are auditing a company where 90% of the assets are in the equity or debt of the group companies, it's CIC. Mortgage companies, factor companies. So this is some of the, based on activity, Reserve Bank of India has bifurcated. Now, I will skip this because Rahul sir has well explained this particular slide, wherein base layer, middle layer, upper layer, and top layer. There is no company at the top layer it's kept vacant. There are 15 NBFCs at upper level. Probably there are more than 500 in the middle layer, and yeah, here, and most of them are in base layer. So this is where, and we know each one of us can audit, each firm can audit 8 companies. One more thing, when it started, I have realized that when you undertake any NBFC audit, it is necessary that we notify it to Reserve Bank of India through Form B, that B2 form has to be submitted. Initially, I have seen that many chartered accountants had forgotten to do that, or they did not realize that their company has become a NBFC and therefore it needs to be notified with Reserve Bank of India. So if you happen to undertake audit of NBFC, or if your company happens to convert it into the NBFC, it is necessary that your audit approval also has to be notified to Reserve Bank of India. And each one of us can undertake, as we all know, maximum of 8 such audits. So broadly, this is the bifurcation in terms of number. So ICC is like more than 7,500 plus ICCs. So like I explained to you earlier, that it may be so that because many companies have got converted into that due to certain reasons. There are few things which I would like to specify here with regard to base layer and middle layer. Now, if the company that we are auditing is a non-deposit accepting company, then it up to 1,000 crore it can be into base layer. However, if it is accepting any amount of deposit, it has to be classified under middle layer irrespective of its asset size. So this is something which we should know, that then the regulations relating to middle layer are applied if they accept the uh, deposits. Number one. Number two, if you are auditing any NBFC which is part of a larger group, or there could be many NBFCs in that group, like Tatas are there, or Bajaj are there. So there are uh, groups, Mahindras are there. So there are large number of NBFCs in. So a stand-alone NBFC cannot be considered. It is the total has to be considered, and based on that, whether they are middle layer, they will be under middle layer or upper layer, all of that. Middle layer basically. Not so even if they are small, they would be considered as middle layer. So these are the practical aspects of compliances that come into picture when we conduct our audits. So this is as far as the overall understanding is concerned. Now let me go to, I'll just stop and start with another. Yeah. Since Rahul sir had spoken about base layer, I will first take up base layer, and then I will go to the overall one also. So this is nothing beyond what he has presented. However, when it comes to our assignment with any NBFC, it is necessary that we have a proper compilation of entire regulations available to us. One more thing I forgot to talk about, if the NBFC that we are auditing is a HFC or a housing finance one, besides Reserve Bank of India, there are guidelines issued by National Housing Bank also, NHB also. So the guidelines relating to HFC also have something to do with NHB, and we need to ensure that those guidelines are also followed. So what we have done, I'll just tell you, ensure that we don't miss out on the point. For a base layer, I have compiled 20 such heads under which we need to ensure the compliance as far as base layer entity is concerned, which amounts to one, registration, then prudential regulations, provisioning, refinancing, liquidity and risk management framework, disclosures in financial statements, dividend, IPO funding, loans against NBFC own shares. What is the regulations? Loans against gold jewelry, governance guidelines, fair practice code, and miscellaneous instructions. So this is a checklist. You will see most of, or rather all of this actually featured in the presentation of Rahul sir. So what we have done here is ensure that those are tabulated in such a manner that during the course of our audit, all we need to do is ensure that these guidelines are adhered to. So from time to time, whenever the new guidelines are issued, you can always keep adding ones. So registration is concerned, we spoke about net owned funds. We all know that in his slide also he explained, now they are applicable next year onwards. Everyone, I say minimum NOF will have to be 10 crores. So this year when we are auditing, we have to ensure that the NOF has reached 10 crores for any of the NBFCs that we are auditing. Again, restrictions, leverage ratio we spoke about, tier 1 capital. So NBFC primarily engage in lending against gold jewelry. Minimum tier 1 capital has to be 12%. Otherwise, okay, unquoted equity current investments, standard assets provisioning. So liquidity guidelines, notes to accounts. So what all things are necessary from the notes to accounts perspective. So these are the aspects which we have ensure that they are adhered to from time to time. Declaration of dividend, he spoke very well on this. So I would not like to again get into these aspects. They are not allowed to give any loan against their own shares. Loan against gold and jewelry, or they have to obtain approval of RBI to open branches exceeding 1,000. If the branches grow beyond 1,000, they need to take permission from RBI. So I'll just try to tell you only those finer aspects which have not been spoken earlier. Opening branches abroad, etc., etc. So these are the 20 point parameters that we need to take care when it comes to the base layer is concerned. Then I will just, because it may so happen that the NBFC, although it may be small, but if that happens to be from a larger group where it is considered as the middle layer, we need to see to it that what could be the additional requirements that may have to be attracted, or that may attract for the purpose of this particular. So middle layer, like I said, all deposit taking NBFCs are considered as middle layer. And for non-deposit, only asset size, if it grows beyond the 1,000. Multiple NBFCs in a group. So I spoke about it. Yeah. So NBFCs are required to make the internal assessment of ICAP, the capital requirements, when it gets to, I think, yes, middle layer and above. Treatment of balance sheet size, current. Yeah. So NBFCs except IFCs, okay, shall not have exposure exceeding 25%. So the exposure norms is something that need to be added to, because especially the problem arises when it's a small company. Uh, Sometimes even um, a, a a particular amount of loan is a possibility that they exceed the exposure norms. So 25% of the tier 1 capital and 40% of the tier capital for a single group. So this is the exposure norm that we need to ensure that the NBFCs have not breached. And similarly, 30% for different purposes, there are different exposure norms given. So ensure that uh, none of the NBFCs will exceed the exposure norms as given by the regulators. Sensitive sector exposure. Uh, so exposure to capital markets, especially. Okay. And commercial real estate shall be reckoned as sensitive. So sensitive exposures need to be notified. Loans and advances to senior officers of the NBFC. So these are the different norms. Audit committees. Audit committees, NBFC shall constitute an audit committee consist of not less than 3 members, and within that, then there are different types of committees: remuneration committee, etc., audit committee, all of this. Fit and proper criteria for the directors, key managerial and personals, independent directors, guidelines on compensation, uh, participation in the currency options. Uh, so unless you keep this kind of a checklist with you, there is a possibility that we miss on any of the compliance, and at a given point of time, we will unnecessarily be regarded as somebody who has not complied with the norms. Now, especially NBFCs, if you look at, this is as far as the overall compliance framework is concerned, which we need to ensure that we fulfill. There are also issues relating to um, fundraisings, FLDG issues that Rahul sir spoke about, uh, that they share the risk with the banks. So calculating the risk, calculating the amount of percentage, providing the necessary certification as to what are the recoveries, whether what is the bifurcation of interest, principal. These are very crucial aspects, and many times the summary recoveries take place, and the accounting treatment generally goes to toss if the bifurcations of principal interest and the share of risk between the banks and the NBFC is not well defined when it comes to recovery. We need to ensure that for every such recoveries, we have to have the proper bifurcation. Number three, when it comes to systems, NBFCs, now there are tech in NBFCs which actually collect lot of data. So many times we have observed that the NBFCs kind of assessment they undertake of the borrower is non-traditional and as compared to banks or other financial institutions. So, because most of these microfinance, especially, they are very unsecured loans, small loans. The NBFC resorts to certain techniques that gather information about the person from various angles, such as they will see his electricity bills issue, they will hire some agency to understand electricity, how whether he is paying right, his credit card agency, bills, whether they are being paid on right time, and a lot of other personal data. Now, there is also a requirement that you cannot keep that data on your server after the disbursements and all are taken place. So whether your system ensures that the data is purged from the system, otherwise data privacy issues also may arise. So you can have the data for the purpose of your assessment, but you cannot store that data with on your server for a long time. So these are the aspects which are fine, not only relating to Reserve Bank of India, but there is Data Protection Act, there is a National Housing Bank, and then there are other IT cyber security regulations. These are the different areas besides the Reserve Bank of India regulations that we need to keep in mind when it comes to actually audit of NBFC. I believe if we were to go on each of these aspects, they are very long, but I have listed down these aspects for the purpose of audience, and they could be available to you uh, if the institute permits. You know. So these are the various board oversights, liquidity risk management. I won't keep going on these aspects. Disclosures. And rest is all same as far as the base layer is concerned, which we have discussed already. So this is the checklist which helps us from ensuring that we don't miss out on any of the points from the regulator perspective, any regulator, be it RBI, NHB, or MCA. So with this, I believe I have concluded my speech. I would be very happy to take any questions.
Done. Rahul sir, you're also there.
Yeah, I'm there.
Sandeep sir, thank you so much for the session. Thank you so much for taking out the valuable time for us. And so I'll start with some questions that I've received from the participants. So the first is, what are the different types of NBFCs and what is the minimum capital required for new NBFC creation? Sir, am I audible?
I think types of NBFC have already been elaborated in both the presentations.
Yeah, but still at the cost of repetition, I'll tell. Earlier scheme, the NBFCs were classified based on their risk appetite and systemically importance. But now, as per the new guidelines of 2023 of scale-based regulation, the NBFCs are classified into four major categories, that is top layer, upper layer, then middle layer, and base layer. So there is a guiding path for these NBFCs to reach the net own fund of 10 crores by March 31, 2026. So there are different categories of NBFCs. Actually, I had covered in my slide also. So if you want, I can share that slide also with you. So the requirement of net owned fund is different for different types of NBFCs. So I'll request you to please refer to our circular of 2023 October 19. So everything has been made very clear in that particular circular.
Okay. The next question we have is, if it is a very small NBFC having NOF of less than 10 crores, then whether it will go out of NBFC regulations or has to shut down?
That actually depends on what time you have this NOF. So as per the scale-based regulation, that's why I said you have to refer to that particular guideline of 2023 scale-based regulation. So everything has been made very clear, because if that NBFC is categorized as a core investment company or some other company, then in that case, the NOF requirement will differ from company to company.
Okay. The next question is, what are the current compliances or expectations from NBFCs, especially those in the base and the middle layers?
For that also, I will request you to please refer to our guideline on middle layer NBFC scale-based regulation. So there is some difference in asset classification for NBFCs in middle layer as well as base layer, like NPA classification, as well as the governance requirement, then periodicity of the returns. There are some stringent regulations for NBFCs in middle layer as well as the upper layer NBFCs. So there is a little difference, because for base layer NBFCs, some relaxation has been given by the bank for conduct of their business. Like for statements DNBS 1 to 10, all the statements are not required for NBFCs in base layer. But for NBFCs in middle layer and upper layer, the requirement is stringent and that has to be followed. Because if they are not submitting the statements to Reserve Bank of India on our SIMS portal for continuous period of 3 years, so that time there is a possibility or action will be taken for cancellation of certificate of registration. That we have already done for at least 80 companies. So, and for example, in Calcutta, the eastern region, sometime back, some 10 years back, there were some 8,000 NBFCs. So now if you look at the base layer NBFCs, they are only 4,000, around 4,000. So you can imagine the cancellation of licenses by Reserve Bank of India over the period of time.
Right. So the next we have is, what are the practical challenges auditors face while auditing NBFCs, particularly in areas like risk classification and compliance reporting?
So do you want me to answer this question, or?
If Sandeep sir wants, he can answer.
Yeah. So basically, I have not understood this question, because is that what auditors face?
Yes. What are the practical challenges that auditors face while auditing the NBFCs?
No, basically, if you actually have not understood the question correctly, but I would like to just mention here that there are enough guidance available from the institute as to how to conduct the NBFC audit for each area of NBFC. The guidance is very well stipulated. The documentation that are required to be maintained for the purpose of audit also has been specifically specified in the guidance note and the working capital working file implementation guide. So if you follow those, I do not see any challenge per se, unless there is a specific question on any of the area.
Right. Rahul sir, if you wish to say something about this.
See, I have already mentioned about some common deficiencies which are observed in the financials of NBFCs and returns. So there are actually multiple challenges which are faced by NBFCs, like see the comparison between expected credit loss, IRAC provision. It is not as per the templates of Reserve Bank of India. Then in case of digital lending, the provisioning has not been done for as per digital lending guidelines. Then incorrect investment value. So there are so many practical difficulties which are faced by these statutory auditors. So as they keep on working on that, they will find out so many other challenges which are there. So if I list out, already we have listed out these challenges which are based on the feedback which has been received by the statutory auditors. So there can be so many other things other than what we have listed out, which statutory auditors have to look into when they are actually working with NBFCs. So these are just examples which we have quoted here, but they should not be limited only to these particular areas. The most important part for what I feel for statutory auditors is to look into the governance aspect. So if the governance is okay, so most of the things will be in place.
Right. I think these are all the questions that we had. And definitely a lot of positive and good feedback that we've received from from the participants for this session. And just to tell you that we have almost 2,000 participants as of now who are attending this live webinar.
Yeah.
So thank you so much for sparing the valuable time, and thank you so much for taking the session in this webinar. So thank you so very much.
Yeah, thank you very much, ma'am. And if any queries are there regarding the NBFCs, so they
Sure.
can always come back to us. So
Definitely,
we'll
sir.
be
If
available
I
on.
find any of the questions, I'll definitely post that to you.
Yeah, sure.
Sure.
We'll
Thank
be
you
happy
so
to take
much.
these questions. Thank you
Sure.
very much.
Sure. Thank you so much, sir. Thank you so much.
Thank you.
Thank you so much, Sandeep sir. हाँ जी